some other generations would predominantly use just a fintech wallet. So their money sits in the wallet. They transact between that wallet and pay out of that wallet to merchants or their friends, and friends pay them into the wallet. So that is very, very much what happened at the very early stages. So with RTP, what has changed is now you have the capability to do the drawdown in real time. So the customer or the business can see these wallet funds immediately moving into the institution accounts. Now you have liquid cash.
Welcome in, everybody. You're listening to Wrestling Payments, a podcast where we help payment professionals contend with the challenges of modernizing their payments operations and identifying ways to build for the future. If you're interested in payments innovation and modernization, you're in the right place. Now, let's get into it.
Hi, welcome to Wrestling Payments. My name is Joe Casali. I'm the host. I'm here today with Rusiru Gunasena. And if I destroyed that, please correct my pronunciation. Please, if you could introduce yourself and what your role is.
Thank you, Joe. It's a pleasure to be here with you to talk about payments. You did well. It's Rusiru Gunasena. You did very well. I'm responsible for the RTP Network and the Clearinghouse. We here the Clearinghouse run 3 major payment networks in United States, which is the ACH equivalent called EPN, and then the wire equivalent called CHIPS, and the latest payment network, which is the real-time payment network, RTP. Clearinghouse has been in existence for over 170 years, even before the Fed. And when folks, exchange gold across the table, that's what the Clearinghouse really started off, and the history is very rich. So I'm very much honored to be here, responsible for the RTP network at the Clearinghouse. Before the Clearinghouse, I was with Jack Henry for 14 years. I was on their bill pay side, as well as stood up a real-time payments division and a payment hub to connect with Zelle and RTP both.
I've heard a lot of good things about that hub. So if you had something to do with that, thank you. It really, our sister company, NEACH Payment Group, does audits. And when we walk in with Jack Henry, it's like, can I have this? Yep. Can I have this? Yep. Can I have this? Yeah. It's all right there. It's really nice. Not plugging Jack Henry or anything. You were one of my questions I was going to ask about the Clearinghouse and how old it was. But the company's been around for a long time. It's seen a lot of change in banking, which is, if you're a payments nerd or geek, it's really interesting stuff. So today we're here to talk about what's going on with RTP. Now, RTP, I was on the Fed task force that was exploring all these things. They were looking at efficiencies in the system and how can we make the payment systems in general better. And lo and behold, partway through that process, this upstart comes along, known as the Clearinghouse, and decides that they're going to enter the industry with a solution. Now, that was 7 years ago?
That's correct, in 2017. So the RTP network was launched in 2017, and that was the first real-time payment network in the United States.
Which is amazing because the US, we pride ourselves in being leaders and on the forefront of things, and we were kind of trailing. Europe was all over this idea. I think, I get my dates wrong, but I think Australia was defining a new payment system, and you guys really jumped into it. And, beginnings are really tough. You were the first company in the US to try this. And today, we're here to report, you're still around, 7 years later. You hit your first, I'm posing these as questions, they may not sound as questions. You posed your first $1 billion day, and you've posted multiple million transaction days. Do you want to talk about how far you've come?
Sure. So started in 2017. It's the 7th year in existence. So there's been a lot of challenges we have worked through. It takes time to build a 2-sided network, and then certainly hardening the network and the infrastructure, and getting also the early adopters onto the network, making things efficient to onboard and to get here today. Rightly, like you said, we have had billion-dollar days as well as over a billion payments a day. We can see the momentum, which is really month over month, quarter over quarter, the volume and the dollar value of the transactions growing. If you look at where we started to today, we have now over 650 institutions, both banks and credit unions, and about 90% are community banks and credit unions on the network.
That's excellent. We are a payment association, and the core of our membership really is community institutions. So, way to go. What do you think? And you know, my mind wanders as I do these things. But if anyone was looking at the growth of a network, you guys, that first payment, you guys were responsible for it, and now your hockey stick is going up. It's the volume is growing. Who do you think are the best users of instant payments? And just 1 second, there are different payments that are useful for different things. So I remark on this because over the weekend I had to send money back to my sister sent money back to me that I lent her. And I used the apps, right? It was a small amount of money. It was tiny. It worked fine. I can't imagine that's true for a corporate customer or other types of customers. Do you want to talk about, what you're seeing, the best use of your networking and the best customers?
Yeah. So like you said, the dollar value and the transactions growing, we can see that average dollar of a transaction continuing to grow. Even a year back, it was probably less than 500, but today probably it averaged around $750 average transaction value. So what we see as the use cases is really B2B transactions, account-to-account transfers, whether it's wealth transfers or businesses repositioning funds. And also high dollar transactions are also now growing because we increased the limit to 1 million. The network limit is 1 million on a transaction. So you can see those high value transactions also now flowing through the RTP network. In addition to the account-to-account transfers, you also see disbursements, which the businesses are paying their suppliers, the vendors through RTP because it's real-time confirmation of that payment. So you really, when the suppliers deliver the goods, you could pay those bills. And then also insurance payments, property payments are today very prominent. Another very prominent use case is the earned wage access, instant wage access for financial inclusion, where even employers today advertise to say, work today, get paid today. Even Uber or Grubhub drivers getting paid for what they did today, and they have money to pump gas the following day. So those are some other prominent use cases. We are continuing to work with the corporates and the other entities, banks and credit union customers to look at what the right fit, what's the value proposition of RTP, because there is a lot of education and communication we need to do with the bank and credit union customers to understand what their use cases and how do they apply RTP. In addition to that, I mentioned the 650 plus number. We also see institutions seeing the value on receipt. So to receive RTP payments, that's very much of a value add. It helps with the deposit displacement issue they faced, where the deposits are sitting in mobile wallets and other closed loop wallets. Today, customers and businesses even willing to pay to do that drawdown from those wallets into their bank or credit union accounts. So that's another prominent use case we see, the wallet drawdown. So receive, where the institutions are coming live on a receive first and then enabling send is a very prominent use case as well.
That's awesome. We have if you do a podcast, that we have a prep meeting and we kind of do a little mini interview. I'm known for going off script. So going off script a little bit, you mentioned the notification or the confirmation that the payment is there. I know when I write a check, it goes in the mail. When I do it on bill payment, I press a button. I don't know when that's going to hit. even direct deposit. I check my account on payday to make sure the direct deposit went in. Can you talk about how RTP is different?
Definitely. So RTP is real-time confirmation, real-time gross settlement. Even between the two institutions, the money really moves in real time. I think, like you said, you don't post a check and hope it gets there. Hope a fraudster don't get their hands on a check and then alter that or deposit somewhere else. I've had even very, very close look, like you paying your credit card bill with a check and a fraudster can cash it, is kind of, mind-boggling to think when a check is posted to pay your credit card bill that an individual can cash it, right? That has happened. I heard a recent example of that. And so that's what the benefit of real-time payments is. It's really real-time confirmation to the sender. It's irrevocable. It's also then settled between the institutions in real time. So those are all message rich because of the ISO 20022 real-time payments. RTP has the capability to carry information, additional information in that RTP message as well.
And just to confirm for people not really knowledgeable of RTP or instant payments, I can send a check that gets there Monday to Friday. Banks are typically open at a certain time. I can go through a deposit. There's no time limit. There's no. I can do this anytime.
That is correct. It's 24/7, 365.
And it doesn't settle on Monday. It settles right there. It's available, confirmed.
Correct.
Very cool.
Yeah, settlement is instant as well. 24/7, 365, high availability. If I geek out a little bit, it actually is real time across two data centers, active. So it's today people don't hear certain prominent platforms doing their upgrades and patching and them taking downtime like, 20 years ago, right? That's how RTP operates. It's high availability, active across two data centers.
And again, we talked yesterday, but you mentioned something just now, and it clicked. Wallets. So, all the apps, I think they're great for what they do, the Venmos and the Cash Apps, but my daughter confused the heck out of me. She carries a balance on her Venmo, which is like, why isn't your money in a bank? Right. With the system, the money becomes the institutions because it's easy to get it down. Can you elaborate a little bit on that?
Sure. I think this was very early on when the digital wallets came, some of the fintech wallets. The institutions saw the money flowing out of the institution accounts and sitting in these digital wallets. And also it depends on the generation. Like you said, your daughter is very comfortable, not even going into a bank or having a bank account, no relationship with a financial institution. Some of the generations would predominantly use just a fintech wallet. So their money sits in the wallet. They transact between that wallet and pay out of that wallet to merchants or their friends, and friends pay them into the wallet. So that is very, very much what happened at the very early stages. So with RTP, what has changed is now you have the capability to do the drawdown in real time. So the customer or the business can see these wallet funds immediately moving into the institution accounts. Now you have liquid cash in the institution account where you can now use either to pay bills, pay your suppliers. So customers and businesses we see even willing to pay. Some platforms may charge $1, up to $5, things like that, or a percentage to do that drawdown, but still it's beneficial for consumers and businesses to do that drawdown. So it has helped the institutions, both banks and credit unions, with the deposit displacement which happened, right? The deposits were moving out of the institutions, sitting in these, and that relationship is what also was diminishing, because you want the customers' funds in the institution accounts, you want to build a relationship with them, you want them to come to your platform. So that's definitely RTP has helped there.
It's almost like someone warned you about me going off script, because you nailed every extra question I would have just asked. The strategy part there about Why let that money sit someplace else? Bring it back to the institution. Strategy 101. So there's a competitor in the industry that they were born about a year ago. Has there been any, I'm sorry, I'll let you talk. What have you discovered about FedNow coming online and being pretty aggressive as far as acquiring participants? Did business go down? Did business go up? What observations do you have?
So I will start from my industry days before even joining the clearinghouse. When I sat on the Jack Henry side, I worked very closely with the Fed from the early days, helped them with lessons learned, what I saw when I implemented sitting Jack Henry, the payment hub, integrating into Zelle and RTP. What I saw when the Fed announced, there was a lot of confusion created in the marketplace. A lot of institutions went into a wait and see mode. What do I do? Do I join the network, which is there now? Do I wait for the Fed? So it created a lot of uncertainty and confusion. So what really helped starting last year was now the institutions can move on, right, and make a decision. So we saw a renewed interest in RTP when the institutions are now making the decision to join a network. They obviously join the network who has been here for 7 years, who got the volume, who got the endpoints, and we have seen a renewed interest, and you can see the numbers growing on the RTP network. Month over month, institutions are joining. That's one part for sure. The second is really the send use cases. So with the endpoints, we have really about 98% ubiquity because of the major third-party processors who have connected already. All the major TPSPs are connected to RTP, Jack Henry, FIS, Fiserv, and the list goes on. They're all connected to RTP. Because of that, we have about 98% of institutions or DDAs connected to RTP. So it's a case of technically turning them on, just flipping switches, not building tech. So that's also an advantage for the institutions, the community institutions, to go talk to their tech vendors, their co-providers, and say, let's turn on, even at least receive only mode, and then look at send use cases. So that is something which is happening as well. We have seen a renewed interest in that as well.
So for now, and I say for now because in my mind, at some point, the networks will talk to each other. Maybe we didn't talk about that yesterday. There's no plan. I know nothing secret, but my imagination says at some point they got to talk to each other at some point. Just like if it was a credit card, the same terminal can do a MasterCard and American Express. They're all different. So at some point I say that. And just like I would say to you in 2017, there was that first transaction. FedNow is now experiencing that first transaction. You've been here 7 years. There are players on your network that apply a specific use case. And my favorite, and I went to a session maybe 3 years ago, was this company called Digit. And please talk about anyone you like, but Digit was really cool because their solution, they're not RTP, they're not Fed, they're not a bank, but their solution was a rainy day fund. And the problem was when that rainy day hit and it was a Saturday and they went to a car dealership to buy the car, they tried to get their money and they said, that'll be 3 days. Sorry. So it was really defeating that rainy day fund idea because it was raining and I couldn't get my money. And they signed on. They have a solution with RTP. You can go buy that car on your rainy day and get the money instantly. Do you want to talk a little bit about any other use cases? But you have as my boss Sean Carter would say, you have a bench. There's a bench of companies using the network.
Definitely. So you touched on interoperability, so I want to start there first. The collaboration which I did in the industry still continues. Clearinghouse collaborated even before I joined from the early days as well, sharing the specs of RTP with the Fed. That collaboration continues. We are ready at any point when the Fed is ready to begin the conversations of interoperability. Generally, Fed has been the first to market and clearinghouse has followed. But in the case of RTP, we were first to market and the Fed followed. So you would hear sometimes even our CEO refer to as that, it would have been great to have interoperability day one with the following network. But I think it's not easy to build a network. We understand they have a lot of work to do and hardening of the network, things like that. So we are ready. We continue to collaborate on different feature functionality. How do we align the two networks? Because our institutions, all banks and credit unions, would like to see some, compatibility between the two networks. So at a product level, we collaborate. I have a great relationship with the Fed. We do that. So I just want to touch that interoperability, which you touched at the beginning of the question. Moving to the second part of the question on the use cases. So you're absolutely right. Some of the use cases, auto loan disbursement, we can see that we are sitting in a car dealership and wanting to buy a car, and that is a great use case for RTP. You could fund the loan and transfer the funds to the auto dealership in real time, and then you could drive the car out of the lot, and the dealership has the confidence they got the funds. The other use cases, I think I touched on the gig economy workers getting paid. I touched on the instant wage access, earned wage access use cases. Insurance disbursement is also another prominent use case. That's, you are submitting a claim and you need the funds to get your car repaired, towed, and repaired. So insurance disbursement is another one. Property payments are another one. With the limit being 1 million, now we see more and more escrow payments and property closing payments on RTP as well. So those are some of the very prominent use cases. But like I said, we continue to work with the industry, work with the bank and credit union customers on send use cases. We are trying to create some playbooks, some material so that, the banks and the credit unions can have those conversations, help them show the value proposition, and brainstorm on those use cases to bring them on. Because some are existing use cases, some are net new. There is a lot of innovation happening on top of RTP as well. We see that within institutions, their customers, fintechs, they're really choosing RTP as the first network right out of the gate. So there are some new innovative use cases as well.
So I don't know if you see me writing here, but you keep reminding me of questions to ask. We don't have a ton of time left, but let me try to go through them. I didn't touch on this, but I know NEACH. NEACH is the ACH association. They have the closest they get to a real-time payment. It's same day, ACH. They saw a bunch of activity when they moved from up to $1 million in a dollar limit. Did you see, was there any bump when the limit changed?
Not immediately. It takes some time, but I think over time we have seen that growing. We monitor what are the payments over 100,000, then 500,000, and over time we have seen, not necessarily immediately, because sometimes where the technology works, where the limits are enforced even at an institution level or by use case, it takes a little time. But over time we have definitely seen that the new use cases over that limit has been continuing to grow. That's why even the average dollar value increase on the RTP transactions.
All right, I have a comment and then the scheduled last question, which doesn't mean it's the last question. You mentioned playbooks a minute ago, and from the beginning, we've been an advocate of RTP since the beginning. Your resources have been tremendous. And for anyone looking, theclearinghouse.org, RTP is on that site. They have a document center. Anyone can go into the document center. They were very informative, very communicative. There are resources there for anyone who's interested in, do I want to do RTP, all the way to show me the rules. So it's a great resource if you're looking for a resource. Question, you talked about collaborating with the Fed. You've talked about improving the network. Is there a newer application on and that's like a loaded question. Is there a newer feature that is just kind of getting pushed now about real-time payments, RTP?
I would say RFP, request for payment. In some jurisdictions, it's called request to pay. So request for payment is really a game changer when it comes to bill payment. Today, it comes through the secure banking channels, not a bill coming through the mail or through email. You could get, fraudsters coming in the middle of some of those traditional means of getting a bill, and then you send the money to the wrong place. But when you think about RFP through the RTP network, the request for payment from a merchant comes through the secure banking channels to the customer. At that point, the customer is in control. It's not like an ACH debit hitting your network and taking the money without your control. You have the control. You control that RFP and authorize the payment because it's a credit push from the RTP side, but you're authorizing that request for payment, agreeing that amount is correct. I have a relationship. I owe this money to this cell phone company or water company or electricity bill, and then making that payment. So request for payment, we started with low risk use cases. We took a very calculated approach with a warranty framework in place. And now we are in phase 2 of execution of that request for payment journey. So we are continuing to add new use cases and growing RFP. So request for payment is one, I would say, is one of the new features, which is really going to change how we transact, whether it's consumers or businesses.
And so if you're new to the industry or new to payments, with an ACH, I can send you money, it's a credit, or I can pull money out of your account, it's a debit. For RTP, there's only credit pushes. They're only ever sending a credit. The RFP is an instruction that says, hey, here's a message through the network that says, here's a message. I want you to send me a credit. Send it when you want. I could put a time limit on it. Do you set an amount? Do you let them set an amount?
No, you can put an amount in it saying this is the amount due and send the request of payment with the amount.
So it's all teed up for your institution to send the bill. And I always think of this as a utility company that send the electric bill in. It's really odd and hard to explain sometimes. I can send you that, and there can be a time limit on it. So even though it's over the real-time payment network, I can send you the RFP. You decide in the next 2 weeks when you want to send it. When you send it, it's instant, but not until you hit that phone. Really interesting. There's a lot of buzz around RFP. I know lots of folks are looking at it. Really, really interesting. So one more topic, and I'm sorry, I lied. One more topic, pandemic. Pandemic hit everyone. You weren't with the clearinghouse when the pandemic hit. You were still Jack Henry?
That's correct.
What did the clearinghouse see? Was there, I imagine everyone said, I can't get to the office. What do we do now?
Yeah, definitely. I think across the ecosystem, clearinghouse is not alone, but saw a renewed adoption in digital payments, right? A lot. We were already digital, but I think a major percentage then moved away. Even some of the folks who were still posting checks or going through traditional means moved over to digital payments. And then real time in particular, I think the funds were needed in a more real time manner. So a lot of payments moved from even traditional digital networks into real time payments. So definitely saw that shift across the pandemic into the RTP network, new use cases, whether it's folks doing account to account transfer, disbursement. I think there were a lot of needs when the pandemic hit where the funds were needed in a more real-time manner. So we saw that. Then the commerce moved to many digital channels and delivery methods change. People didn't go to the grocery store to buy, or there was no contact. So we had to, payments were no different. So payments had to also move into those methods, be real time, no contact. And why should payments be any different when Amazon is today delivering your goods the same day, or your food is being delivered within minutes when you order it? Why should payments be any different and take hours or days? Right? So that's exactly what we saw through the pandemic. I think there was a behavior in consumers and businesses which shifted into that real-time mindset.
Well, excellent. I didn't do any wrestling, who's your favorite wrestler or any of that, but this topic is definitely a wrestling with payments topics. So it's interesting. We continue to follow it. I think we're going to talk to you again when you hit the next record. I appreciate that. Anything I didn't ask or you'd like to share with the audience?
I think you hit quite a few good points. I would always, as a closing, would say I encourage the institutions who are still not on RTP to at least join, because you are technically capable of doing that through your technology provider or the core provider. So you're missing out. Your customers are missing out on receiving those RTP payments. At least on a receive only, you should first join, get your feet wet on real-time payments, and then start looking at send use cases. So that's what I continue to encourage. The thousands of institutions still not joined. If you look at the number, 650, when we have 10,000 institutions in the country, there's a long way to go.
Right. No, I agree with you. And that's the advice we start. We tell them, start with receive,
That's
get
right.
your feet wet and experiment. Well, thank you very much. This was great. I would do this again in a heartbeat. And thanks everyone for listening. Click all the buttons, save, like, comment. Appreciate it. All right.
Thank you, Joe. Pleasure to be here.
Pleasure. Yeah, thanks.
On behalf of NEACH, your trusted resource in payments, and our guests, I'd like to thank everyone for tuning into the podcast. If you've enjoyed this episode and want to hear more about payments innovation and modernization, you can find the Wrestling Payments Podcast on the podcast page of NEACH.org or wherever you subscribe to podcasts. Just search for Wrestling Payments in your podcast app. Thanks for listening.